Today's episode of This Week in Startups is brought to you by GoToMeeting. Sign up for GoToMeeting using promo code START to begin your free trial. And MailChimp. Manage a list with up to 2,000 subscribers and send 12,000 emails per month for free with MailChimp.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah. Money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you.
Hey everybody, it's Jason Calacanis. We're here in New York City. I'm running around town interviewing some of my friends, VCs, entrepreneurs. It's been a great trip so far. With me today, Jay Levy of Zelkova Ventures, a good friend. And after this message from our important sponsors, we're going to discuss falling off the stage at the launch conference, the Nobu lunch that I owe him, and some of his great investments and what's going on here in New York City right after these messages. Hello everybody, it's Jason Calacanis, the host of This Week in Startups, and I'm here to tell you about the wonderful GoToMeeting. GoToMeeting. Wait a second. No, I gotta start here. Wait. GoToMeeting. It's not easy to do that. It's much harder than it appears. I use GoToMeeting all the time, and this is one of the great things about having a podcast like this is that I get to pick the partners. And I made a list of the products I use every day, every week, and I gave them to the sales team, and I said, hey, these are the people I would want as partners because I use their product. Right at the top of the list was GoToMeeting because I use it every week. Let me show you how easy it is to set up a meeting, and I'm going to guarantee you it works, and it's flawless across all of the different types of browsers and desktops, everything. It just works. And when you're setting up a meeting, by definition, it's a meeting, it's important, and you want to look like you know what you're doing, because if you don't get that meeting started on time and easily, you look like a dope. I cannot tell you how many times I've been on an angel investing call. How many times has this happened? We've been on a pitch, and somebody can't get a goddamn meeting set up, and you're just like, you start feeling bad for the person because they've wasted 10 minutes.
Your first impression, yeah.
It's the first impression. Well, let me show you how easy it is so you don't look like an idiot when you're trying to set up an important meeting. Boom, you just go right to your desktop. This is if you got the software installed. I mean, dead simple. I want to schedule a meeting. Okay, what is the name of the meeting? Tyler's contract renegotiation, whatever. It's going to be today. It's going to be at 7 o'clock. It's not a reoccurring meeting. Well, it's reoccurring every year. So can I set it as, no, it's not reoccurring. We're not going to do this every week, Tyler. Provide audio information. Use the GoToMeeting integrated audio. Or are we going to use a conference call number? Like maybe you say, I have a bad internet connection here. I don't want to let people use the voice over IP. I don't trust the internet. I'm only going to do the conference call number. Or maybe we're only going to do voice over IP. I don't want anybody dialing in. I'm going to say provide both. And or I can put in my own conference call information. Hey, I'm going to put a password in here that Tyler rocks the house deeply. And then I just schedule that meeting, and boom, we're done. We're done, and I can go email it to other people if I want to. And an email invitation has been done. I can just look at the invitation text here. Boom. I can copy to my clipboard, and you're just done. And it's all done. In seconds, you've just created an easy-to-use meeting. So if you've ever had those meetings where it just works, here it is. Use your microphone and speakers. A headset is recommended. Or call in using our number. Da-da-da-da. When I see that, I know the person is serious. And they got the meeting ID, and it's from GoToMeeting. It just gives you that very secure feeling that this meeting is going to go off without a hitch. Don't look like a dope by using one of these other cheap pieces of garbage software that doesn't work, frankly. That's it.
They're dedicated to it.
They've been doing it for a long time.
It's in their name.
GoToMeeting. I mean, I don't know how many times I got to tell you guys about it, but this is the one that works.
It's not a tool that's meant for just chit-chat or whatever. It's meant for meetings.
It's meant for meetings. It just gets it done. And speaking of getting it done, what a great episode we have for you coming up right now. And the reason you're able to get this episode for free, the reason it exists, the reason we have HD, the reason we have beautiful lighting, the reason we have Tyler Crowley's insights, the reason we have craft services, the reason we've got engineers here who make it flawless and perfect and make sure it's uploaded to iTunes the same gosh darn day. which is a pet peeve of mine. Like, I can't tell you, I fight with these guys all the time. I want that video up within 3 hours of the end of the show, and it takes work. You have to bust your butt to get that show up and running. We have all this equipment. We got the TriCaster 850. That costs 40 dimes. It's not cheap, and we are so lucky to have GoToMeeting as a sponsor because it's a great product, and it's flawless, and it never fails. Thank you to GoToMeeting for providing everybody with this episode. Thank you, GoToMeeting. Okay, we're back. Thank you to our sponsors for making all things possible. Independent media like this, flying around the country, meeting with these great minds and the investors in these great companies isn't cheap, and we couldn't do it without the partnerships of these great companies. So I do appreciate it, and you should appreciate it too by using their products. With me today, Jay Levy, of course, venture capitalist here in New York City, Zelkova Ventures. Tell me about the firm. How long has it been around, and what have you invested in?
So we're, surprisingly enough, one of the older guys in the block here. We've been around for approaching 4 years now.
4 years?
Yep. So we started and the market's tanked. And then the markets have obviously booming now, probably a little too crazy here in New York. And, so we invest in New York, San Francisco, some investments in Boulder, starting to look at some new places where valuations seem to be a little bit better and things not as bubbly. Some of our existing companies are companies like Fab.com, Jive, Klout, Food Spotting, Livefire. Those are some of the consumer-facing ones. On the B2B side, companies like Finance, Mobile Commons, Encoding.com. We've got 35 companies in the portfolio now and actively investing.
So 35 in 4 years, that's a good pace. Yep. You mentioned valuations. Valuations pretty low in 2008, I guess, or average with the financial crisis. Yep. But there's been a big run up here in New York, hasn't there?
There is, it's kind of a pendulum, right? And in 2008, when things went downhill, I think the pendulum swung into our favor, probably too far, right? And then
that means you could get better deal terms, liquidation preferences, control, whatever.
Exactly.
A bigger percentage of the pie for a smaller amount of money.
Exactly. And now the pendulum really swung into equilibrium, which I think is where you want to be.
Right.
But now, the past 3, 4, 5, 6 months, especially in New York, the pendulum is swinging way the opposite way. And in the long run, it's not good for the entrepreneurs, it's not good for the VCs, it's not good for anybody in the industry.
But there's no way to temper that in a free market, is there?
There's not. I mean, the way you temper it is you have resistance and you don't invest. We're in a unique situation where, unlike most funds, we don't have to deploy capital. We don't have a time limit. We're an evergreen fund. Right. We can redeploy any exits we have and any monetizations, which is nice. So, we're just trying to be focused and stick to our guns, and we're passing on some deals that we would have loved to have done at the right valuations, but they just don't make sense at those numbers. And
so for entrepreneurs, you can't blame them if they're willing to, if they can get a great valuation, can you? I mean,
I think it's short-sightedness, right? You fund a company at too high of a valuation, I think a lot of times you're setting yourself up for failure. How many people go on to create multi-$100 million companies? Very few, right? And if you fund a company at an 8 or a 9 pre that should have been a 2 or a 3, in order for you as an entrepreneur, in order for you as an entrepreneur to do well, you've got to create a multi-$100 million company, right? And versus, I know a lot of the talk a year ago was all these startups are being created to sell for 20, 30, 40, 50 million dollars.
Right.
And the founders did very well, right? And the investors did okay on many of them. But you fund a business at 8, 9, 10, you sell it for 20, your investors are not going to want to sell too quickly. It's going to be looked as a failure.
So then you get into a sort of stalemate situation, which is why just 2 years ago, or a year and a half ago, when we started the Open Angel Forum, and you've been involved here in New York, valuations seem to be $1 to $3 million. Now, angel rounds, $6, $7, $8, $9 million for 2 people and an idea or a little bit of execution.
A little traction in the market, and it's not just here though. I'm also seeing it out west, but not as bad, interestingly enough, out west.
Oh, really?
It's New York is kind of that bubbly hotspot right now where everyone wants to be.
A lot of West Coast VCs. I see Sequoia, my friend Ruloff, who's on our board, is invested in a couple of companies. All of a sudden, New York is. People are seeing why it's such a great town to start a company. Why is it a great town to start a company?
I mean, I think now more than ever, a lot of the infrastructure is here, right? It's a very dense town in a lot of ways. You can get around easy. There's been some successes, right? Companies like Foursquare have been successful here.
Tumblr.
Yep. And that makes it a better environment for people. They become more excited. to be here and
Yeah.
you know, be among these startups. So you see some successes, and it's like everyone says, well, we can do it here in New York.
So the community counts for something. When people see a lot of companies succeeding, they want to be amongst that. It breeds more entrepreneurial activity. What are the downsides to being New York other than the massive amount of noise that we hear around us?
I mean, some of the biggest downside right now is the most frequent request I have, which is development talent. There's a very, very large shortage of development talent. We've got companies opening offices out west. Not to say that out west there isn't a challenge, but it's a different challenge. Here in New York, we have a lack of the pool.
Right.
Out west, you have an abundance of competition for the pool, right? With companies like Facebook, Google, and Twitter trying to hire.
You're up against big companies there.
Right. But I'd rather be up against a big company and try to hire someone
Than up against nothing.
than not have the opportunity to hire one in the first place.
What about like Boston and DC and Virginia and the Research Triangle? I mean, these things are all pretty close to New York. They're on the same time zone. Do you see companies saying, hey, let's put some developers in Boston where there seem to be some good ones coming out of school?
So, you know, Boston is great. You definitely have some challenges around salary expectations up there, which has been a challenge for us in the past.
People expect more.
Yeah.
Why? Because they went to an Ivy League school?
Yeah, I mean, that's
it.
You know, pretty much it. And, you know, it's, you either want to work at a startup for the love of the startup and the potential upside, or you want to make $150,000, $200,000 a year. It's hard to make both at a startup. And make both happen.
And it's not sustainable for a startup to do that.
Some of the other areas you're talking about, Research Triangle,
Yeah.
there's a lot of activity, a lot of opportunity down there.
Yeah.
We have just actually made our first investment in Raleigh, North Carolina,
Wow.
a company called Spring Metrics. So I've been down there twice now. I'm going to
Yeah.
be heading down again in about a week and a half.
Quality of life is amazing down there. Homes are cheap, and you can have some great schools and a great lifestyle.
Yeah.
If it's a developer who maybe has a family, doesn't want to be in New York or Boston
and
anymore.
we're seeing great talent there. So
Yeah.
it is an area that, you know, I like to think or say that, you know, we were on the forefront of seeing the opportunity in the seed stages in New York 4 years ago when there was very few options here.
Yeah.
So we're now looking for other areas. You know, for us it will have to be in the U.S. We're typically U.S. focused, but I think there is enough opportunity here.
We're just, I don't know, a stone's throw from Wall Street here. IPO market starting to heat up. And by heat up, I mean they're actually occurring.
Yep.
Actually, out of the gate, they don't seem to be exploding. I mean, you had a little bit of a pop with LinkedIn, but then back to earth. It's still, you know, whatever, 50% up from the IPO or maybe double. But what are your thoughts on the IPO market and the impact on the startups here in New York?
Well, I think overall, what doesn't happen is the exuberance that happened back in 2000, 2001 and that time, right? Because what will bring this market down is if the everyday consumer who says, you know, let me buy 100 shares of LinkedIn, you know, buys it at 110 and now it's trading at 70. And that happens, right? And there's a lot of people who have lost 30, 40% already on LinkedIn, right? As it had that run up.
Do you think those were consumers, or do you think those were, you know, you think those were like retail, like consumers, mom and pops, dentists? Or do you think those were speculators with a lot of money in their pocket saying, this is like Facebook, I'm going to take a flyer?
I mean,
hard to tell.
It's hard to tell, but at the end of the day, it's, you know, I think if Main Street gets impacted by us again, right? Up until companies started going public, Main Street could not be negatively impacted. These companies could fail, and a lot of venture funds, which, you know, have endowment money, have private wealth money in it, could be impacted. But, you know, the average Joe living in Main Street wasn't going to be affected.
But nobody put a gun to their heads and said, buy these stocks. They were just betting. They were gambling just like it was Vegas.
Yes, but
doesn't stop them from starting a lawsuit, does it?
It doesn't stop them from changing, because there's a lot of them out there, right? And that's consumer sentiment, right? And so I'm hoping it doesn't go nuts. I'm hoping that people's memories aren't short, right? And they remember what happened to them in the web vans and the pets.com back in 99, 2006.
E-Choice, the Globe, lots of things flamed out.
I hope that doesn't happen, because I think that will be bad for the industry as a whole.
What do you look for in an entrepreneur? I mean, when you look at some of the successful ones you have in your portfolio, is there something that you just look at and say, that's the thing, you know, like every VC's got like a thing or two, a tell. Like it's not just the market, it's, you know.
I think self-awareness and understanding what it takes, right?
Huh.
And being realistic and communicating and leveraging people. I think some of the best entrepreneurs on our portfolio are some of the most open, right? Probably overly open more than they need to be, but they want to leverage, right? And I think that's really key. And understanding what everyone has their different strengths, and making sure that your strengths are fit with what your company does and the industry you're in. You know, and look, it's a little bit about investing in people you want to be with and want to be
Right.
around, right?
I mean, you're going to be around them for a pretty long time.
Yeah. So hopefully, right? Companies
Yeah.
succeed slowly but fail quickly, generally speaking.
Which company did you pass on that you just keeps you up at night that you passed on? You have to have some
Yeah.
massive regret.
Um,
Give me the massive regret list, the ones that got away.
Posterous, we saw back
Yeah.
in the day.
Yeah, liked it a lot. Great company.
You know, that was definitely one. I think that's the one that really sticks with me
Yeah.
because we were so close and it was just one little thing we couldn't get over, and you know,
What was the thing?
it was deal terms.
Oh,
You know,
I see.
In retrospect,
Probably not that important.
In retrospect, it was not important at all.
Is that something that you see like new VCs get concerned about deal terms, and that it seems like the more experienced VCs, the older ones, don't get hung up on them as much? That's been my experience as an entrepreneur, and I've heard it from other entrepreneurs. Is that true when you're a young VC? You sort of get more focused on the term sheet than the opportunity?
So, yes, and if you look at the deals that I did 3.5, 4 years ago, and look at our legal fees associated with them versus
Yeah.
our legal fees now, they're probably quadruple the
Ah.
amount, which is a sign that you get more hung up in the legal and the minutia. And if you look at the actual, you know, the protections, you then realize it doesn't matter. Either they succeed and you'll do well, or they're going to fail. And if you fail, you lost your money, and that's what it comes down to.
Right, but for a VC to lose their money on 6, 7, 8 investments, it actually doesn't matter because that's the game you're in, is trying to have 2 or 3 big wins.
It's exactly. You're looking for the home runs, and you're hoping to minimize the zeros. And you know, if you can get a few singles out of what could have been a zero, you're probably increase your returns a bit. But you know, you're looking for the big companies.
Yeah, it's not gonna. You're not gonna get there by singles and doubles. You know, the limited partners who gave you the money, if you're hitting just singles and doubles, should have done something else.
It's not justifies. It doesn't justify the risk.
Right.
Right. You know, you want to make it double over the past 3-4 years. You would have been better on Wall Street.
So what is the state of the venture industry? We hear that some of the people are having problems raising funds. Some people aren't. Big funds are getting launched. Is it contracting? Is it expanding? What exactly is going on? Because you see these different indicators. Oh, there's less VC raised this year, but then there's more exits happening. What's exactly going on in terms of the
I think
VCs?
there's a barbell. I think there's a lot of early stage money and a lot of late stage money, especially here in New York in both
Right.
cases. I think there's this middle ground where you want to go for like 3 to 5 to 20 million bucks,
Yeah.
right? Where there just isn't much there, especially here in New York. So
Right.
I think that's going to be a challenge over time.
So you got Insight Venture Partners over here, and Devin from Insight, and then over here you got Chris Dixon doing angel stuff, and then what's in the middle?
Right. You know, exactly. There's not much there, right?
Yeah.
And yeah, I think that's going to be a big challenge for New York because I think what's going to happen is a lot of the angels that are coming into the industry now, like I said earlier, companies fail quickly but succeed slowly, right?
Yeah.
So there's going to be this time gap between when they see exits and when companies have failed, and they're going to be gun shy, right, to put more money in. And I think you're going to wind up seeing
A lot of
New
angels are
York's-
tapped out. I mean, they've invested for 2 or 3 years. That's enough.
Yep.
You're going to have a lot of these 5 or 10 person companies. What's going to happen to those companies, 5, 10 person companies?
Look, some will go on and raise money.
Yeah.
We're pretty lucky that 9 of our companies this year have raised follow-on money, pretty substantial from companies like Greycroft, Kleiner,
Yeah.
good funds. I think total is about $55 million in follow-on
Wow,
capital
that's
has
great.
been raised.
Klout is a great one.
Yep. But there will be some companies that, you know, they're going through $200,000, $300,000, $400,000 a month, and the angels don't want to fund it, right? And they'll have
Yeah.
to close their doors. And if you can conjure up some return or some exit, great. But you know that won't always happen.
We're going to have a lot of zombies. That's my prediction. If you can, I can call them zombies. He's got to be magnanimous about it. But a lot of these zombie companies are just going to be like living dead. They're alive, but they're not going to break out. They can't raise more funding, but they can't go out of business.
And hopefully, you know, maybe the IPO market will help with that as companies, you know, have access to cash and can do
Yeah.
some acquisitions of these companies, right?
Yeah, they'll pick up some.
So maybe it will help the ecosystem from that perspective.
Final question, Klout.
Yep.
When I saw it, I thought this is the stupidest idea I've ever seen.
Yep.
Couldn't get my head around it.
Okay.
You invested.
We were one of the first, yeah.
A year later, I put on this Chrome extension. I started looking at the Klout number on my tweets.
Yeah, that's great.
And I say, oh my God, this is invaluable.
Yep.
I totally get it. And now with MailChimp, I've been sorting my email list by who's got the highest Klout score and just emailing segments of my email list. Could never do it before. And I said, my God, this is a brilliant company. What didn't I see that you saw?
So a spreadsheet is the answer. So kind of the story there is I got introduced to Joe through Twitter. Started following. I think I logged into Klout, checked my score like a lot of other people, and he started following me on Twitter. And we were pretty early at this, pretty young at the point, and we reached out and I said, look, next time I'm in San Francisco, let's meet. And him and Vin, we meet at some hotel in the lobby. They whip out this laptop and they're like, we don't want you to look at the site. Look at this spreadsheet. And they had this spreadsheet with all this data and all these different ways of slicing information. Yep. And that's what we saw. 4 months later, we were the first institutional guys in over there at Klout. And their growth has been phenomenal. I, a few weeks ago, went and visited their new offices and was blown away by the growth and how well they're doing. And they're really the market leader in the space, which is great.
I mean, you have Pure Index, but they don't seem to have as good a product. I'm going to predict right now that's going to be your biggest exit. I think it's going to be $150 million. You heard it here first. Klout.com, $150 million by Facebook in 2012. I'm going to say March or April. No, I'm going to say May or June of next year, $150 million. Okay. Jay Levy, thank you for not suing me for falling off the stage at the launch conference. My bad.
Well, I
but
look forward to being a sponsor again, and this time staying on stage.
Stay on stage, and let's go to Nobu, and it's on me.
Sounds good.
Awesome.
Thank you, Jason.
We'll see you next time.
Until we get the money, spend the money and defeat you. Yeah, money is the root of all evil. What? Funny how it feeds my people. Yeah, we ain't gonna live like equals until we get the money, spend the money and defeat you. It's been a minute, so you thought you were safe. You trapped behind these bars like you locked in a cage. Stuck behind bars, making minimum wage. Your bar's tender. Here's a tip that you will raise. Ain't nobody gonna offer a profit to motherfuckers who ain't rocking it, topping the hip hop charts and then stopping it. Quick to drop a set opposite of the hottest shit, copping it. It's the profit kid. Moments quick to accomplish. I'm positive. Getting green like a roster with a lot of dread. Money's piling up like the Washington Monument. The way I'm steering this track, it'll make you car sick. The only time you gonna see green is when you barfing. I'm the Mothman, consider this the prophecy. I'm in it to win it, that's why I'm making a profit, see. And I won't spend it till my rich is stupendous. And I'm selling sicker than tech, is the method is to keep it independent. Money is the root of all evil. What? Funny how it feeds my people. Yeah, we ain't gonna live like equals until we get the money, spend the money and defeat you. Yeah, money is the root of all evil. What? Funny how it feeds my people. Yeah, we ain't gonna live like equals until we get the money, spend the money and defeat you.